Hi friends, I am Sumit. I sincerely hope that all of you are keeping yourself safe. This is my YouTube channel Massive, a platform which I use to upload some informative videos, mostly related to some ongoing contemporary issues taking place in India or abroad. So today I'm going to address the issue of money laundering. You must be aware about this general term money laundering, which is the process of transforming your black money into white money. So, however, I'm going to get I'm going to go a little deeper into it, and will be telling you what different stages this entire process goes through. So the first stage would be placement, then layering, then integration. Then I'm going to tell you the different modes of money laundering like treaty shopping, round tripping. I'm going to discuss other terms like DTAA, base erosion and profit shifting, and several other things which I'm not able to recall right now. As I go along, as I go ahead, I will be discussing those things in this piece. So I strongly feel that this video is going to be very informative because I have done some homework, and if you are really hungry for some relevant information on this topic, sit tight, and I promise you that every second spent watching this video would have some worth for you. So uh, let's get started. So I was reading this article where I found that USA has proposed, along with other countries, has proposed that there should be a global minimum corporate tax rate. So USA proposed that minimum corporate tax rate should be 21% across the globe, or at least across those countries which are part of this grouping, large grouping of more than 130 countries. What is the need for it? As recently, the US Treasury Secretary Janet Yellen, yes, you have heard it correctly, she used to be uh, chairperson of Federal Reserve until few years ago. Now she is serving as Secretary of US Treasury, known American economist. She coined a new term, 30-year-old race to the bottom. So basically, she was referring. I'll come to the money laundering very soon, but let me tell you what's happening here. So I was reading this article, and that really led me to read few other things, and then one thing led to another. So I end up watching few videos, and I end up reading many articles. That's why I feel that this video is going to cover so many things on this topic. So basically, she was referring that several countries are trying to lower their corporate tax rates in recent past to attract multinational companies in their countries. And this practice is not new. This has been continued for past 30 years. Now, what is race to the bottom? 30-year race to the bottom. What is race to the bottom? Basically, if one country is going to reduce their corporate tax rate, other countries are not going to sit idle. They are going to repeat the same thing. Otherwise, they are going to lose out other those corporations, because they will shift their profits, they will park their funds in those tax havens are nothing but those jurisdictions, those countries which offer either nil or lower tax rates, any kind of tax rates, capital gain tax rate, income tax rate, corporate tax rate. Okay, so in that sense there is a race to the bottom. If one country is doing it, other countries will follow the suit, so they will also reduce the tax rate. Now now this country will further lower it down, so there is race to the bottom. And if every country is going to do the same thing, who will suffer? The exchequer, the treasury. Who is exchequer? Who manages the funds of the government, who holds the who take care of the purse of the government. Okay, so exchequer is going to suffer. Exchequer is going to be deprived of funds which we require to invest in the economy. Nowadays, we are grappling with this unprecedented pandemic which has spared not single economy. Let aside advanced economies, they are in fact feeling the brunt of it. USA, Italy, Japan, name any developed country, they are feeling the brunt of it. No wonder why USA has announced more than 2 trillion US dollars as a hefty fiscal package which is going to be spent on infrastructure sector, because they feel that infrastructure sector is a sector which would have higher multiplier effect. So when I say multiplier effect, it is nothing but it's basically a value by which your investment get multiplied and gives you a very higher return. So suppose if you spend $1 on infrastructure, it is expected that it is going to give you a higher return, say $2, $3. So that 2 or 3 would be the multiplier. So infrastructure is believed to have a higher multiplier effect because it has many forward and backward linkages. It has many spillover effects. And even India has announced some hefty package for infrastructure sector recently. I'm not able to recall the name of that initiative. I think NIP, National Infrastructure Pipeline. Correct me if I'm wrong. Drop your comment. So USA has earmarked more than 2.3 trillion US dollar for this initiative. But if every country is going to reduce that their corporate tax rate, then USA and such other economies would be deprived of their tax revenue, because corporations, business entities, individuals would be shifting their funds in those countries. They will be shifting their operations in those countries, and taxable base would be reduced. What is taxable base? If I have an annual income of 8 lakh rupees per year, I have an annual income of rupees 8 lakh, and we all know that generally most of the time every year when budget is passed in parliament, we see first 2.5 lakh rupees is exempted from income tax. So only 5.5 lakh would be the taxable base for the government. Government would be able to levy different tax rates only on this 5.5 lakh rupees, right? Because first 2.5 lakh rupees is exempted. So this 5.5 lakh rupees is taxable base for the government. So in that sense, because of this profit shifting in the backdrop of other economies reducing their corporate tax rates, economies like USA are going to suffer because they are going to see the reduction in the taxable base. That's why this term, there is this one term, base erosion and profit shifting. That base erosion is nothing but erosion of taxable base. So now you know what is BEPS, base erosion and profit shifting. So far so good. Now, but when other countries reduce their tax rates, basically those countries are known as tax havens because they are reducing their tax rates. So in one way they are enticing the corporations from other countries to invest and set up their business operations in those tax havens. So because of these tax havens, sometimes these entities, individuals, companies, they invest their money there for multiple purposes. First, sometimes they use this channel to launder their money. When I say launder their money, it means they try to convert their black money into white money. I'll tell you how it exactly happens. That's what this video is all about. So then they also do it for tax evasion. By the way, there is a difference between tax evasion and tax avoidance. So when we say tax avoidance, it is nothing but suppose if you go to some chartered accountant or lawyer and go to him and ask him, okay, look, how I need to invest my money so that I can avail some exemption and reduction. So CA would recommend you, okay, fine, you invest in these instruments, and under different sections of IT Act, you can avail those exemptions and deductions. So basically you are trying to exploit the loopholes within the rules, within the tax rules, within the tax provisions. So that's legal. You are basically reducing your taxing you are basically reducing your tax burden, and that's completely legal because you are doing it within the given law. Okay, whereas tax evasion is evading of tax. You are hiding your possibly you are hiding the source of your money. You are not paying tax at all. Okay, that's called tax evasion, and that is illegal. In that case, you would be subject to criminal prosecution. Fine. So these these tax havens are also used for tax evasion. I'll come to that how it happens. So so basically that was the that's how I that's how it all started from my end. Now let me talk about money laundering. What is it? So money laundering, as you know, this is basically, no, first let me talk about what is the genesis of this term. Some people say that since laundry does clean your clothes, so in the same way money laundering as a term, it has been coined because it's a process of cleaning your dirty money. That's a very foolish way to put it. There was one American gangster, Alfonso Capone, if I'm able to pronounce that correctly. So he was running a illegal outfit to launder money. So basically, in the early 20th century, USA imposed prohibition. So whenever we say prohibition, generally it means prohibition on alcohol. Whenever we say prohibition, by default it means prohibition on alcohol. So USA imposed ban on the sale of alcohol in early 20th century. So of course it created the supply gap and provided arbitrage opportunity for these liquor makers, and so they actually saw good opportunity into it, and they started selling it in black market. And but now they needed to convert this money into white money. So what exactly this person did, that he set up several laundry houses in different cities of USA. Laundry houses, and we all know that laundry houses, you must have seen it in Friends, known TV serial, uh, or even Breaking Bad, on net available on Netflix, where when Walter's wife goes to Saul, the lawyer advise her that okay, you need to acquire some laundry business, and you through that channel you can easily convert your black money to white money. So these laundry machines, you have to put while using laundry machines, you have to insert your coin, and then you can get your clothes washed. So basically this kind of businesses which are running on small transactions are generally out of the purview of law enforcement agencies. They do not attract the attention of law enforcement agencies. It is only the large sum of money which attracts the attention of tax authorities, right? And this practice is also called smurfing. Smurfing is a practice when you divide large sum of money into small amounts, so that it does not attract the attention of such agencies. So he basically engaged in smurfing. Through this practice of smurfing, he actually set up these laundry houses, and he actually literally break that large sum of money into small amounts. That's how this term has been originated, money laundering. And even when demonetization took place, immediately after that, several people who could not deposit their black money in bank accounts because it would have attracted the attention of tax authorities, they prefer to stash their black money by first dividing it into small amounts, and then depositing those small amounts in several Jandan accounts. So Jandan accounts were zero balance accounts. Basically, when you open a bank account, you are supposed to maintain some minimum balance, right? But in 2015, I think government come up with this very novel initiative called Pradhan Mantri Jan Dhan Yojana. So through this initiative, several people were asked to open their, especially people of lower income class, because generally they are the ones who suffer from lack of access for financial inclusion, lack of access for financial services. So to promote financial inclusion, these accounts were made zero balance accounts. So even if such people would withdraw all their money at one go, or if they won't deposit money in those accounts, they would not become dormant or dead. Okay, so people who could not deposit their black money, they deposited such small amounts in those Jan Dhan accounts, so that tax authorities would not get any attention, because they would be of very small amounts, right? And since I told you that crores of people subscribe to those Jan Dhan accounts, so there was no dearth of such Jan Dhan accounts. Okay, so that's nothing but kind of a smurfing practice, if you see. So now let me tell you what are the different stages of money laundering. So the first stage is placement. When you try to place your money in the financial system, as I said that these people during after right after the demonetization, they attempted to or rather succeeded in placing their black money in small amounts in those Jandan accounts. So first stage is when you place your black money in the financial system, but that's not enough. What if you get attention from tax authorities? So the second stage is layering. When you try to maneuver your bank accounts, you try to move this money as much as it is possible until it becomes practically impossible for the tax authorities to determine the original source from where it all exactly started. So basically, people try to move their money through multiple bank accounts, and so that's the second stage. And when this is also done, then the third stage is integration. When finally you get you are free to use that money, take your money out from that source and invest wherever you want. So that is the final stage, integration. When you integrate your money with the with the uh, with the system, right? So these are the three different stages of money laundering. Now let me talk about the different modes of money laundering, like treaty shopping, round tripping. But before I talk about that, it is imperative for me to tell you what exactly is DTAA. What is the role played by shell companies in laundering money or tax evasion? So what are shell companies? So I'll be talking about those two terms in next few minutes, and then I'll come to those other two terms, that is round tripping and treaty shopping. So DTAA is nothing. It basically stands for Double Taxation Avoidance Agreement. So suppose if one investor is residing in, say, Mauritius. Mauritius is one of the tax havens. So there are several tax havens in this world: Cayman Islands, Mauritius, Singapore, Bermuda, Bahamas, several Caribbean islands. So suppose there is one investor residing in Mauritius, and he purchases some shares of Indian company. After a while, he decides to sell those shares, and we presume that suppose he witnesses some capital gain, hefty capital gain, then Indian authorities would be asking him to pay capital gain tax. Okay, because the business transaction took place in Indian jurisdiction. However, there is a good possibility that the Mauritius authorities would also be asking him maybe a different rate of capital gain tax because he resides in Mauritius. So there is a good possibility, and it used to happen in several countries, that investors, they used to pay double amount of taxation on same income earned. So to avoid such things, countries at bilateral level used to engage in some kind of agreement known as double taxation avoidance agreement, where they decide that okay, fine, like India told Mauritius that okay, we are not going to levy capital gain tax. Since an investor resides in your country, it is up to you that you levy capital gain tax. But Mauritius did not levy capital gain tax. So this was the major loophole. So basically, because as I told you, Mauritius is a tax haven. So tax haven is any jurisdiction which either levies a very minimal tax rate, any kind of tax rate, or levies zero tax rate. So then this really prompted the investors from other countries. Suppose there is one investor based in India, he would see this as an opportunity. He would see that okay, fine, there is one country, one tax haven. He is going to park its funds from India to Mauritius by setting up a shell company. What is shell company? Shell company is any company which is not experiencing any significant business or economic activity or business transactions under its name. or which might have some minimal number of assets under its name. Basically, such companies are created on papers to make authorities look that okay, they are created for some genuine purposes, but that's not the case. So suppose if some investor or some known company based in India would set up a shell company in tax haven, then he would channelize its this company would channelize its funds. I'll come to that later, how exactly they do that, but they would channelize that funds from this place to this place, and from there they will invest in the Indian stock market, Indian real estate, Indian infrastructure sector, wherever, because they may have their own reasons to invest in India only, but they don't like to invest in Indian stock market based in India. They would rather prefer to invest in Indian stock market while based in Mauritius, because Mauritius does not levy. There is a good possibility that Mauritius does not levy tax on several things: tax on interest income, tax on your dividends, tax on capital gain. Okay, so this process is called round tripping. Of course, they need money. So basically, it is the same company which would be using the funds, right? So basically, it is channeling. It is basically moving its fund from this place to this place, and from there they're investing back their funds into the stock market. So basically, round tripping. Round tripping is nothing but a trip started from one place to another, and then it gets ended from where it began. That's how round tripping. So round tripping is done for tax evasion, as I told you, but it is also done for money laundering. What if some company or some known individuals, they have generated some black money? What is black money? Black money is a money which is generated either from illegitimate sources, like drug trafficking, organized crime, human trafficking, terror funding. These activities are illegal. So the money generated out of those activities would also be considered as illegal. So black money is a money which is either generated from illegitimate sources, or a money which is generated from legitimate sources but has not been declared for tax purposes, has not been declared to the tax authorities for tax saving purposes. That is also termed as black money. So suppose if there is a group of individuals or a company which has generated black money, then they would want to launder this money by setting up some shell companies, and when the money would be coming back to India, it would be very difficult for authorities to because it is coming from outside. They would not have very much leeway to detect its source, because this is happening through round tripping, right? So it would appear like clean money. So in that sense, this round tripping is also used to launder the money. Now, what is treaty shopping? What is treaty shopping? Treaty shopping is when, if suppose there is a double taxation avoidance agreement between India and Mauritius. So investors residing in Mauritius would not have to pay capital gain tax neither to India nor to Mauritius, because India has opted to not levy capital gain tax as per this agreement, and Mauritius is a tax haven. Now imagine a company which is located in some third territories, third jurisdiction, say South Africa. There is one company X, located in resided in the based in the South Africa. Now this company would set up its shell company in the Mauritius, so that it could take advantage of this treaty. So that's why, in that sense, it is treaty shopping. You are not part of this. You are not part of either of the jurisdiction between which this treaty is meant for. Rather, you belong from some third jurisdiction. Still, you are somehow maneuvering some loopholes and trying to take the advantage of the treaty. That's called treaty shopping. And again, it is used for both purposes: tax evasion and also money laundering. Suppose this company, the company which was based in South Africa, Suppose it had to invest in Indian stock market, so it would not directly prefer to invest in Indian stock market from either South Africa or India. It would rather prefer to go to Mauritius by setting up its own shell company or subsidiary company, and from there it would do the same thing to reduce its tax burden. And the second reason could be the laundering, money laundering. That is, which I already told you how it happens. Okay, so now you know round tripping. Now you know treaty shopping. What could be the other modes of money laundering? Hawala funding. What is Hawala? Hawala is a Urdu word which means trust. So suppose I need to, suppose some person needs to pay 2 crore rupees to his relative or his friend or anyone else based in Saudi Arabia. So suppose there is a person who is in India, he needs to pay 2 crore rupees, or let me make a much hypothetical example. Suppose he needs to pay 25 crore rupees to a person based in Saudi Arabia. Of course, if he would, make it happen through bank accounts, then it would attract attention from tax authorities. From where did he get such large amount? So what he would do, he would go to some Hawala agent based in India only and ask him, okay, look, can you transfer 25 crore rupees to my relative or to my friend based in Saudi Arabia? I'll give you some commission, good commission. He would say, okay, fine, give it 25 crore rupees. I'm going to give you this code, and you tell this code to your friend later. So now what will happen? This Hawala agent based in India will contact his another Hawala agent based in Saudi Arabia and ask him that, okay, look, you are supposed to pay 25 crore rupees to a person who is going to tell you only after you verify the code which is going to tell you. So basically Hawala agent 1 tells that code to Hawala agent 2 that, okay, this is the code which you have to verify when some person is going to come to you to fetch that money. And this person based in India, the first person, is going to tell the code to his friend through any means, and this is how it happens. But now the question is, since the money is not crossing the border, why this Hawala agent 2 is paying 25 crore rupees? Is not he taking a lot of risk? Because what if this person, Hawala agent 1, does not pay 25 crore rupees in near future to Hawala agent 2? Well, that's not the case, because it's a large syndicate which is operating. Maybe very near future, maybe Hawala agent 2 would be doing the same thing in a opposite way. So this entire thing works on trust, and that's what Hawala is. Hawala in Urdu word, Hawala means trust. This entire thing, this entire syndicate works on trust. So this is also one of the mode of money laundering. So I have covered treaty shopping, round tripping, Hawala, DTAA, shell companies. I think I covered most of the things. So thank you so much for your time.